What's up, you guys? It's Peter here, and today I want to answer the question, which is how much money do you need to become financially independent? In order to do that, we're going to cover a little bit of math, and also we are going to do some back of the napkin calculations and use an assumption, a rule of thumb. And that rule of thumb is about the 4% rule, which basically states that you can withdraw about 4% of your portfolio in perpetuity if it is invested in something like the S&P 500. The S&P 500 on average returns about 7% after inflation over long time spans. So that means if you take about 4% out of that, your portfolio will continue to grow and will continue to sustain itself. Now you might say, wait a second, the S&P 500, 7% after inflation, the 4% rule, only 4%. What about the remaining 3%? Well, that 3% is there as a buffer because not every year is going to be a positive return year. Some years you might have negative returns. So that means that that 3% is there as a buffer. So let's turn this on its head a little bit. The example that I want to give is, for instance, if you say you have $100,000 in your portfolio and you want to withdraw some money from that. According to the 4% rule, you can withdraw 4%, which is $4,000 out of that $100,000 if that $100,000 is invested into that S&P 500 fund. So, okay, $4,000 in perpetuity. That means forever. Great. Now that also means that as inflation goes, that absolute number, right, will be bigger than $4,000. Over the years, it'll grow and it'll start to get a little bit bigger, but relatively, it'll still be 4%. So what I want to do now is turn that rule on its head. And what does that mean? That basically means how much money do I need based off of my own expenses in order to become financially independent? And remember, financial independence means that my portfolio covers all of my expenses. All right, so let's dive into this. I have over here my calculator and also my back of the napkin. So let's throw out some numbers, right? So we already said that the 4% rule basically means that on $100,000, right, I can say multiply this by 4%. So what is 4% over here? 0.04, and this will return $4,000 for me to use in perpetuity. Great, that's the traditional 4% rule. Now, what about this 4%? Where is that coming from? Is that actually, is that safe withdrawal rate? It is considered a safe withdrawal rate for a time span of about 30 years. Now, you can go more conservative with this. You could say, okay, what about 0.035 or even 0.03, right? And so you're going to get different numbers over here. But the point being is that 4% is already considered pretty conservative. At the same time, if you really are going to retire really early, then you may want to have maybe, over here, 3.5% instead, or even 3% if you have like, I don't know, 40, 50 year time span that you're planning to, retire. So anyway, the 4% rule that I kind of want to use is the other way around. So for instance, I have an expense. Let's start with something small. Let's say I am going to go to my favorite coffee place, and I'm going to buy every day a coffee and also a bagel. So let's take our expense, together. Let's say that's $7. So over here, $7, right? Coffee and bagel. Now I need to annualize that, right? So I'm going to annualize that by just saying, okay, this is my daily times 365. So how much is this going to be? Well, let's figure it out. $7 times 365 days is going to be $2,555. So $2,555. Okay, that's my expense, my annual expense. Later, we're going to see there are other expenses, my internet bill, my rent, my electricity bill, all these bills, right? So this $2,555, how can I now relate that to the 4% rule? Well, I would need to either divide it by 4%, or we can do the other calculation, which is maybe a little easier as a rule of thumb. That's times 25. So divide by 4% or multiply by 25 is the same calculation. So let's do it. Let's say this one, multiply it by 25 again. And so what is this going to give us? Well, this is the $2,555 times that 25, which represents the 4%. So that gives me about, over here, $63,875. And this amount, right, is what I would need to have invested into an S&P 500 fund or another investment that returns on average, let's say 7%, to make sure that I can withdraw forever this $2,555 every year. That would basically allow me to continue expending that $7 a day for the rest of my life. So it's kind of fun to sort of think about that. You know, we started with coffee and a bagel. So my coffee and a bagel, right, in order to afford that $7 per every day, I need to have about $64,000 invested in the market. And I like doing this in terms of like, I like thinking about it this way in terms of, it may seem like a lot of money, right? For some people, 64,000 is a lot of money. For others, maybe it's not that much money. So now let's expand on that and let's expand that to our entire lifestyle. So that basically means how much is my lifestyle, or how much. Let's do another example. Let's do this together. And this time I want to say, instead of $7, we're going to spend a little bit more. We're going to say, okay, how much is your rent? Let's say initially, you know, your rent, your mortgage, whatever. Let's say it's $1,000, right? So let's do that. $1,000 over here. Again, that's a monthly thing, so we got to make sure that we do times 12. So that is going to return about $12,000, right? That we have as a yearly expense in terms of our rent. Okay, again, same deal, right? So times 25, or let's do the other way around. Let's say now what I want to do is I want to divide this, right, this $12,000 by 4%, 0.4, right? Same kind of operation as what we did before. So let's do that over here. I'm going to reset this calculation here. So we said $12,000 divide by 0.04. It's the same thing as multiplying by 25. So that means the result here is equal to 300,000. I should indicate it's dollars, $300,000. All right, $300,000 will cover that expense. So great. Okay, so if I wanted to say I want to have bagels and I want to have a place to live and sleep, then that's going to cost me about 300 plus the 64,000 here, about $364,000 to basically live, rent, and have bagels and coffee every day. At least, you know, one meal of bagels and coffee. Okay, so now let's figure that out, right? So a good idea when you're starting to do this is how much are you spending every month, right? It might be good to sort of do a little budgeting and at least track your expenses so you can kind of sort of figure out how much is your monthly expense, and from there, how much is either your daily expense or also your yearly expense. And then from there, we can basically extract out how much is going to be the total number in your portfolio that you'll need in order to become financially independent. So let's do this now. So let's figure out, let's say my monthly expense is about, I don't know, somewhere between $2,000 and $3,000 a month, right? So let's figure that out. So here, $300,000, but $3,000 times 12. It's going to be 36,000. 12 times $3,000 equals $36,000. $36,000. Cool. Let's do the same thing times 25. So how much is that going to be times 25? It's going to be $900,000. Okay, now we're talking, right? So it's kind of starting to become slightly larger numbers. Now that depends again on how much my expenses are. But in essence, I would need $900,000 to basically afford my current lifestyle for the rest of my life in perpetuity. Now, I'm in my mid-30s, so basically, is that achievable? The answer is, well, that depends on how much you also earn, right? Or that also depends, can I lower my expenses? Because currently, $3,000 a month, for some people, it's like, oh, that's a lot of money to spend every month. And for some people, it's like, well, that's actually not that much money. Once you have a family and kids and maybe a bigger house, or you live in an expensive city, cost of living. I live in Los Angeles. and the cost of living is pretty high. So definitely, feel the expense. But let's figure out a way. What happens if we were to say this $3,000? We're going to lower this. Let's say I managed to save another $500, right? So what happens then? Well, same deal. Here that's now, let's say, $2,500 times 12 is equal to, let's do the math once more, 2,500 times 12 equals 30,000, right? So, oops, let's also say dollars again, $30,000. All right, that's my annual expense, let's say. Let's multiply this now times 25, and now we're down to $750,000. So notice that that's $150,000 difference, right? In terms of so here if we say again times 25 equals 750,000. Right, so the 750,000 is $150,000 difference. What a difference! By being able to save $500 or reduce my expenses, by $500 every month, I basically need a lower number by about $150,000. So that's quite amazing. What an impact that this $500 every month has on the final number that I would need to become financially independent. Now, if people really can kind of save a lot of money, right? In the sense that, or at least they get their expenses down. So if they can get their expenses down to something something not ridiculous, but something really low, right? We're basically saying something like, what if you can live off 1,500, right, a month? Is that even doable? I know for me that's pretty much not doable, but for some people that might be doable. So 1,500 times 12 is 18,000, right? So 18,000 over here per year. Now that to me seems really low, but again, in some countries, not necessarily in the US, or maybe in parts of the US, that's possible, right? If you are living in a very low cost of living area, it might even be somewhere abroad, somewhere in Mexico, or somewhere in Thailand, or somewhere else, if you go after the expat lifestyle, that kind of thing. So let's see, how much would it be for the 18,000? Well, again, you're gonna say, okay, multiply this by 25, right? And let's figure that out. So multiply by 25, and now we're down to $450,000. Now, 450,000, here, let's move this over a little bit, dollars, 450. Great, $450,000, right? So how long is that gonna take you to get that kind of money together? Well, that really depends on your savings rate and your income. But at the same time, it's not impossible to achieve that, right? $450,000, it seems like a lot of money, but this is gonna be over 10, 20, 30 years that you can achieve this. And basically, once you achieve that amount of money, you can basically choose to live for the rest of your life without necessarily working a job, and become financially independent if you want. Or if you do want to work a job, that's totally fine too, right? But you can choose to do whatever you want with your time, and that is really desirable. So let's see this 450. We can also do it the other way around, right? So let's say if my expenses start to go a little bit higher than 3,000, let's say 4,000 or 5,000. Let's briefly do that as well. So let's hide this one, we'll make a new layer, and let's dig into it. All right, so what if my expenses instead are something like closer to $5,000 a month? Now, maybe to some that might seem like a lot of money, but to others, again, it's all relative to your cost of living. So 5,000 times 12 equals 60,000 a year. So that's gonna be basically $60,000 a year. How much money do you need in order to be able to spend this kind of money a year? So again, 60,000 times 25 is equal to $1.5 million. Now, is this just for yourself, or is this as a couple? Well, you can do this calculation for a single person, for a couple, for a family. It doesn't really matter. All that matters is, how much are your expenses at the end of the day? How much, or yearly, I should say. This is $60,000, that's yearly. So how much is that gonna be? Over here, that's $1.5 million, right? Now that obviously seems like a large number, but again, is this for one person? Is this for two people? Is this for a high earning individual? Are you living in a high cost of living city, or are you living in a low cost of living city? Are you making a lot of money, and at the same time are you able to save a lot of money? Well, those are going to be all the kinds of things that contribute to being able to save that amount of money, and how long it is going to take you to save that amount of money. So hopefully that's been interesting to you, and if you like this, then please like and subscribe. I will continue to make more of these kind of videos. I am very passionate about finance and about financial independence. So hopefully, if you like this, please like and subscribe. Press the notification bell as well for the YouTube algorithm, as that will help as well. Cool. Thank you so much. See you in the next video.